Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us for another market recap. I am joined today by my co-host, Bruce Campbell with StoneCastle Investment Management. Thank you for joining me, Bruce.
Yeah, here we are. Better late than never, right?
We're in May.
No, I said better late than never.
I know, but I can't believe that we're in May already.
Oh, well, yeah, time is just flying by, right? Soon we'll be out of lockup.
I hope so. I'm ready. Okay, there was a lot going on this week all over the place. So we're going to jump from topic to topic. So make sure that you join us. Lots going on. We're going to talk about the Canadian dollar. It is at a record 3-year high. We're going to talk about how the markets reacted in the U.S. to Treasury Secretary Janet Yellen's inflation scare, what that did to the markets, and maybe some of your thoughts on why she made those comments. We're going to talk about a big capital raise for Wealthsimple and the new valuation that brings that company to. There's lots to dive into on that one. There's lots going on in the cannabis space, of course, so we'll jump into that. And then we're going to end off the day with the unfortunate passing of, a really important investor in our markets today. So we'll talk about that and finish off there. So let's talk about the Canadian dollar, Bruce. What happened?
Yeah, I mean, we keep seeing this flow of money into Canada, into commodities, and obviously that boosts the Canadian dollar. At the same time, we've seen a sell-off in the U.S. So we've seen the Canadian dollar hitting highs that we haven't seen for the last few years, and it really looks like the trend is changing here for sort of a longer duration. We were looking at some monthly charts the other day in our office, and we noticed that it's actually breaking out of monthly chart range right now. So it's already made this big, fairly significant move, and it's just at the point where it's breaking out from a monthly chart. And we know that, currencies tend to be, very long trending. They have lots of counter trend moves around, but they tend to be long trending. Why do we think this is happening? Well, there seems to be, if you look at the chart that we have up right now, it's just looking at the US market, Canadian market comparison. And you can see that we're almost in similar situation to where we were back in 2000. 2000, we saw the technology boom just coming to an end. We saw the technology boom ending. We saw the commodity cycle starting up, which ran into basically 2008. And that was where the Canadian market outperformed. And you can see here that it was up, about 114% versus, less than 1% for the US. So, could we see that again? We always say history doesn't repeat, but it certainly does rhyme. And we're now starting to see, commodity prices all up. Canadian commodity producers are up. The Canadian dollar's up. And these tend to be long trends that run, several years.
That would be amazing. And where's gold's role in this?
Well, gold had a great move last year from, really kind of when the pandemic kicked off in kind of February, March until around September. It made a, fairly significant move. All the gold companies did really well. And then it really sort of lost its luster, as they would say. And it's, kind of dropped a little bit, gone sideways. It was always quite confusing. Most people take a look and say that gold runs the opposite direction of the US dollar. The dollar's been going down and gold really hasn't been appreciating until just in the last few weeks here. In the last, 3 broadcasts we've done, I've talked about the fact that we started to see gold stocks starting to outperform. They've really caught wind here the last, kind of 10 days. And now we're starting to see the price of gold as well. It's, gone through some technical levels that, most of the technicians like to follow, and it's, keeps hitting new highs, or not new highs, but higher highs than it had previously been, kind of in the last 4 or 5 months. So it looks like it's now starting to join the rest of the commodity boom, being that the precious metals, even some of the soft commodities like the grains and oil as well.
I was actually just going to ask you that. I mean, is part of the Canadian dollar movement also to the fact that, we're just so heavily rich in commodities when it comes to lumber and oil and so on. Is that a part of it as well?
Yeah, it certainly is. I mean, when foreign investors come in and buy our stocks, they need to convert money into Canadian dollars. So they're buying dollars as well. When some of these commodity companies repatriate money back into Canadian dollars, they're, selling US dollars to buy Canadian dollars. And, obviously at the incremental level, it doesn't really make a big difference, but aggregate level, it does make a huge difference in all this money flowing back into a currency.
That's great. Okay, let's talk about what happened with Yellen. Yellen's comment this week did create a bit of a stir. So first of all, tell us what she said.
Yeah, I mean, she was basically talking about the fact that we were seeing inflation and that we would probably likely see the Fed act quicker than what they were expecting, and as that really happened, the market just almost immediately sold off, because right now it seems like the market just wants to continually get the stimulus that the Fed has been providing the market. Jerome Powell has said kind of the opposite, right? That he was going to continue to be very forthright with the market as far as when he was going to stop the QE, when interest rates would go up. And so there's sort of lots of chatter behind the scenes that maybe this was a planted comment from Yellen. I mean, obviously when she was at the Fed, she was always very cautious and very controlled on what she said and how she said things. So she's since backed away from that comment, but there's lots of people in the background kind of questioning whether or not this was, sort of a concerted effort that, she's working on kind of behalf of the Fed to help, sort of temper the market's expectation that QE and low interest rates are going to go on forever.
Well, I'm sorry if this is an ignorant question, Bruce, but they can't go on forever, right? I mean, at some point they're going to have to address the inflation and find some way to rectify that. Isn't that right? Or
yeah, of course. And there's a balancing act there, right? They want to obviously see the markets and the economy do well, and at the same time they don't want inflation to get too far out of control, because then we have a situation like we saw in the 80s where we had this huge massive inflation, and they had to counter that with super high interest rates to try to choke everything off from an inflationary standpoint. And so it's that balancing act that they have to do. At some point in time, they're going to have to do something with rates. And the big thing is trying, they know how important the market is from a wealth perspective, but also from a consumer spending standpoint. And so they know that, they have to really telegraph to the market what they're doing. They can't surprise the market, because, it just has disastrous effects if they do too quickly. And obviously, she was involved when she was the Fed with, kind of moving rates too quickly in a certain direction and then, spooking the market.
For those of you who weren't around in the 80s, can you remind us what the interest rate got to? Was it 18?
Yeah, I think the government of Canada, like the Canada savings bonds, went to 18, or actually maybe it was 21% that they, so for a government bond that's almost liquid by the day, rates were, high double digits.
That's insane. It's insane. Well, hopefully we never go back there again.
Well, I mean, you think about what implications that has on business, on borrowing, on real estate, and they're obviously massive. It really, if you talk to the people who were, paying mortgages back then, it really defined, kind of their life and what they could do. And I mean, now, everyone has a McMansion because of the fact that we have lower interest rates.
I was just going to say, it's like buying a house on your credit card. I mean, imagine that for a moment. And it'll be, I mean, I feel the same about real estate right now with rates as low as they are. I worry about people buying into the market, maybe pushing the boundaries on their leveraging ability. And when these rates go up again, how that's going to affect them. So I hope people are thinking long-term and thinking that all through. Let's talk about a big transaction that happened this week with Wealthsimple. They raised $750 million, which created a value of $5 billion. So tell us what you think of that.
Yeah, I mean, obviously that's a huge raise for a public company, but the fact that they're a private company, it makes it even bigger. Obviously this is in a sector where there's lots of interest in that financial technology crossover. And they continue to grow, they continue to roll out services. But the interesting thing, the thing that sort of caught all the headlines was, kind of who invested, right? So Drake apparently was an investor, Ryan Reynolds, and then Michael J. Fox, among, obviously others, probably bigger institutions were the bigger investors. But the fact that, they were there, it's always kind of interesting, and catches the headlines and makes the media when you see that. But you can't take away from the fact that it's a $5 billion private company that was started, I believe, it was 2014, and continues to just add and roll out new services in new areas. And that's right now, kind of interesting that they haven't seen a lot of competition in Canada, certainly from some of the traditional financial services, and so they're gaining a lot of traction with kind of their target market.
Well, there's a few things I wanted to point out about this transaction. I want to get your input on this. So I started out as a broker in 2003, I think it was. It was 2002 or 2003. I started as a broker, and back in those days, first of all, the know your client rules. I mean, that's a full service brokerage, so that's very different than these discount brokerage forms. So let's just make that clear. It's very different. But the know your client documentation, approval from compliance, and then the cost. I mean, the cost of a trade. I think the minimum cost was a few $100s, but we would do trades that were thousands of dollars in commissions, depending on the size of the transaction. So now here we are, about 20 years later, and I actually, just out of curiosity, a few weeks ago went on to open my account. You literally, on your phone, you just kind of enter your information. There's your account. What Wealthsimple offers, which is similar to a company down in the US that you've probably heard the name, Robinhood, offers zero commission trading. What I found interesting about them is they also offer you the ability to file your taxes and to transfer money. So, they really are opening up their suite of financial offerings, which will be really interesting because this is just going to be huge. The one thing that they did say is the reason that they went seeking the Drakes and the Michael J. Foxes and the Ryan Reynolds of the world is exactly for that reason. Their target client is somebody who will be swayed and moved by kind of these social influencers. So that was a big reason for it. But what I wanted to ask you was this. I think this is a super interesting data that I found. So the company in October of 2020 was valued at 1.4 billion. 6 months later, it's now valued at 5 billion. So that's pretty massive. But the Wealthsimple currently has, I believe, 2 million users in Canada, and they have 9.7 billion in assets under management. So here's the numbers that I found in one stat, and that is that essentially, based on the valuation today of 5 billion, with 9.7 billion in assets under management, the investors are paying $2,500 per user who will hold an average assets of $4,800 under management. That's a pretty steep number. What do you think of that, Bruce?
Yeah, I mean, from looking at those metrics, it doesn't make sense, but obviously they're paying for growth. They're paying for, that average account size to go not from 4,800 to be 48,000 or 480,000 or 4.8 million down the road. As a lot of those clients come into the years where they're earning a lot, they're also looking at rolling out other services. And so they're raising this money to attract new clients and roll out new services, which will also be, incremental to, how much money they make per client, because right now it would be fairly low.
What do you think this will do to the banking system in Canada? Do you think that they're going to lose out on some revenues there?
Well, the thing I always find kind of interesting is, right now, the way the financial services industry in Canada has gone is, as the compliance and complexity gets higher, what we've needed to see, or what we've seen, is that the account values have continued to climb as far as what advisors and wealth professionals are willing to work with. And so that's where Wealthsimple really came in, is they were able to structure something and be very simple for the person that doesn't have a lot of money, but they get still rather sophisticated investment management. What will be interesting to see is, as these people start to continually grow their wealth, and a lot of those clients that they're looking at now, or that they have, are just coming into those peak earning years. And so as they start to really accumulate wealth, will they be looking for someone else that's going to provide a higher level of service or different advice than what they're getting with Wealthsimple, or is Wealthsimple able to wrap their arms around these people and really have loyalty because they were there when these people had very little and they provided them with great service. And will that continue on? And do they have 5 other things that Wealthsimple provides for them? Obviously, that's the Wealthsimple plan and that's their model. It'll be really just interesting to see where that shakes out in the future, because that will really define what happens with with wealth management. If it is that way, system where someone comes in with not a lot of money and they deal with Wealthsimple, and then once they accumulate more money, they sort of move off to a different advisor. Well, then Wealthsimple is just simply a training ground or a breed, like a farm team for investing. But that might not be the case. And if that's the case, then the banks will have to really relook at their entire offering, because now Wealthsimple will have captured this entire generation and have the loyalty. The banks will all of a sudden have this huge gap where they'll have to catch up.
And let's not forget that in Canada anyway, that I don't know what the percentage is, but there is a very large percentage of brokerage firms that are owned by the banks now. The independent brokerage firm isn't as big as it used to be, and so the brokerage firms are they're under the financials of the banks as well. So they're offering all of that. And when I worked on the brokerage side and worked for brokerage or bank-owned brokerage firms versus the independents, I know that was a big part of it as well, is that they wanted to provide you with their mutual funds and they wanted to provide you with their banking services. So if they lose out to that Wealthsimple group, it could be potentially bigger losses as far as clientele is concerned.
Ultimately, probably what ends up happening is, one of those banks realize they're either behind or they can't build it, and they'll just go buy Wealthsimple, and that'll be a $10 or $15 billion transaction, and everybody that got invested in this round that paid $5 billion valuation will still make money.
Well, I want to get shares so that I can go to the AGM and hang out with Ryan Reynolds, Michael J. Fox, and Drake. That, to me, that sounds like a great AGM. Okay, let's talk about cannabis. Lots going on yet again, of course. I do just want to mention that it was the launch of the CSC's Cannabis Investor Series this week. It was amazing. It was on Tuesday. We focused on investing in American cannabis, and that the full episode 1 can be found on YouTube. Make sure that you go check it out. It's just over 2 hours, so feel free to digest it in chunks if you need to. But it was amazing, and we'll be doing episode 2 next week, which is the cannabis culture and capital markets. Another great episode coming your way. So make sure that you stay tuned for that. If you go to our YouTube page, make sure you hit subscribe, and we'll let you know when all this content is coming to YouTube for you to check out. But let's jump back into the cannabis space, Bruce. We're going to talk about Tilray and Aphria. Tilray and Aphria closed a merger this week, making them the largest cannabis company by revenue in the world. Tell me about that.
Yeah, obviously it was a huge transaction, and this is something that we think we'll probably continue to see as these companies rationalize their operations and look for synergies and look for ways to grow. Obviously, the big guys are going to probably merge together and become bigger to compete, and then they'll probably also pick off little specialty areas. That's something that we've kind of talked about in the past that could be certainly a trend in the Canadian companies, but also you could see it in the US as well.
Absolutely. We also had yet another great IPO on the CSC, Ascend Wellness. It's been coined as the most anticipated IPO of 2021. I feel like we're talking about blockbuster movies here, but so the most anticipated IPO of 2021. Tell us about that.
Yeah, obviously this is one that kind of ranks up there, the two, and this was the true IPO, whereas Verana was a little bit different, but those are the two that everybody's been waiting for, for the last few years. Huge companies, big revenue, multi-state operators, and so it's one that had huge fanfare and for its debut.
So the one thing I thought that was interesting about that, because I started reading about it, and they came to market on an IPO, they raised $80 million. And of that $80 million, they only issued 10 million shares, which was set to go public at a price of $8. On the day that it started trading, it did rise 22%, which is pretty great for first day of trading for a new company. But the company actually has issued an outstanding 169 million shares outstanding. So I don't know know how many shareholders are in that, but I thought that was pretty interesting. So they went public issuing 10 million shares, but really they already had 160 million shares, as part of their capital structure. That makes them a valuation of 1.5 billion. They're currently trading today at about $9.50 the last time I looked. Good for you guys. Is this something that's kind of normal for you to see, where you see somebody go public and kind of issuing a smaller suite of shares than what's currently outstanding, or does this stand apart a little bit?
Yeah, no, that's quite often the case, especially if you were to look at the cannabis space. A lot of these cannabis companies have raised money privately before they went public, and in this case, I would suggest that they're kind of one of the later ones to the market, especially given their size. And so it's not surprising that they have a lot of shares that they've issued privately before they even got public.
Well, they have what they're anticipating with that 80 million that they raised is essentially to grow out. Obviously, their status as MSOs. They really want to focus on New York, and I know that New York will be just a hotbed. People are clamoring to get in there. So I wish them all the best. Good luck for you guys. Let's talk about another transaction that occurred. Sundial Growers. They completed a transaction with a company called Inner Spirit. And the valuation of the transaction was $131 million. I had the opportunity of meeting, I don't know if they're still the same people involved, but I met the initial people involved in Sundial actually at an event that is sponsored by the CSC called Take Stock Alberta, that's put on by our colleague Mark Francis, and had the chance to meet the group years ago. So happy to see that things are going well for them, and happy to see that this consolidation has happened. But there was something else that was interesting about Sundial. Tell us about that.
Yeah, I mean, the thing that I find kind of most fascinating about Sundial is that, they kind of came out of the gate, and certainly they got caught up in what's happening with the market, but there was a lot of disappointment of kind of how they executed and what happened. Stock price, went down, had a fairly big short position. And then, thanks to the kind of Reddit world, I think from around November, December of last year to February, the stock price appreciated about 600%, which allowed them to raise some money. They were able to raise some money because the short squeeze that happened, they raised it at higher levels. And so now they basically filled up the piggy bank back with money. And so they were able to go out and make acquisitions. And so now they've bought into Inner Spirit, which is the Spirit Leaf brand of cannabis dispensaries across the country. And, now they're buying a business that has revenue and cash flow. And they've been able to do that because of, kind of what's happened with Reddit and short squeezes and, kind of everything that we talked about, going back to the beginning of our shows, right?
Yeah. So for those of you who maybe don't join us every week, it was a few months ago we talked over several weeks about GameStop, and you've probably heard the word GameStop in 2021, and just this action upon a group of investors that went on to the forum of Reddit and decided to on purpose short squeeze GameStop, making it a huge valuation. So it's kind of neat to see that this actually worked out for a company, and like you said, they were able to raise some capital at higher prices, and probably an interest level from investors that was different than before the short squeeze, right?
Yeah, for sure.
Let's close off on a little bit of sad news. There was a passing of Dave Swenson this week. Who is Dave Swenson?
Yeah, so he was in charge of Yale's endowment fund, and he really kind of revolutionized the way that big institutional endowments invest. He looked at multiple asset classes. He looked at, sort of long, short. He talked about factor investing, which is all, kind of the rage here in the last few years. And all this stuff that he did, kind of ahead of everyone else. And when he did, the endowment fund at Yale had phenomenal returns. It was beating its competition. Since then, a lot of these pensions and endowments have really adopted the model that he took. So it was, obviously sad to see somebody who pioneered and made some significant changes, not from an academic standpoint, but actually from a real life portfolio management return standpoint, pass away.
So he started his career on Wall Street. He was only on Wall Street, I think it was 5 or 6 years before he was hired to go and managed the fund at Yale. When he started with managing that fund at Yale in 1985, I believe it was valued at $1 billion. And in 2020, it was valued at $31.2 billion. So, I mean, obviously he did his job very well.
Mm-hmm. Yeah, he sure did.
What should we think about going into next week, Bruce?
Yeah, I mean, a couple of things that we're watching, continue to watch this commodity move with the Canadian dollar. We've talked about the fact that we're looking at these gold stocks, some of the base metal stocks. And then one of the areas that we continue to sort of dig into and look at is some of the, the sports betting and sports areas, which we find quite interesting. There's a few companies coming public. So, that's an area that I think will garner a lot of attention here in the next few months.
Pretty exciting stuff. And again, next week is episode 2 of the Cannabis Investor Series. So make sure you check it out. It'll be Tuesday. It starts at 2 p.m. Eastern Time, 11 a.m. Pacific Standard Time. So make sure that you join us. If you're busy, don't worry about it. It will be posted on YouTube on the CSC TV after the fact. Thank you again for joining me, Bruce. I hope you have a lovely weekend and look forward to chatting with you next week.
Yeah, have a happy Mother's Day. And to all the other mothers out there, have a happy Mother's Day.
Happy Mother's Day.